A notable trend is unfolding in the world of cryptocurrency as the available supply of Bitcoin on exchanges continues to shrink, raising the potential of a supply shock in the future. However, the implications of this phenomenon for the Bitcoin market are not as straightforward as they might appear. Decreasing available Bitcoin supply on exchanges. Cryptocurrency exchanges are experiencing a significant decrease in available Bitcoin, which could lead to scarcity on these platforms. This decline in available supply is a result of various factors, including increased institutional interest, growing retail demand, and a shift towards long-term investment strategies. Supply shock and potential price impact. The shrinking supply of Bitcoin on exchanges has raised concerns about a potential supply shock. If institutional investors, who have been gradually entering the cryptocurrency market, start buying larger amounts of Bitcoin, the combination of their strong demand and dwindling supply could push the price of Bitcoin upward. This scenario has the potential to initiate another bullish cycle in the Bitcoin market. A historical perspective. It is essential to consider that the supply of Bitcoin has been dwindling for quite some time, and during this period, the market has experienced several extended bear markets. Therefore, it is important to note that the reduction in Bitcoin supply does not guarantee a bull market. Instead, it indicates a shift in holding patterns among investors. It seems that more investors are choosing to hold their Bitcoin off exchanges, suggesting a longer-term investment approach. The rise of institutional investors. One of the driving factors behind the decreasing supply of Bitcoin on exchanges is the increasing participation of institutional investors. Traditional financial institutions, such as hedge funds, asset managers, and even large corporations, have been gradually allocating a portion of their portfolios to Bitcoin. These institutional players often prefer to hold Bitcoin in cold storage or custody solutions, rather than leaving it on exchanges. This trend contributes to the overall decrease in available supply on exchanges. Retail demand and hodling mentality. In addition to institutional interest, there has been a surge in retail demand for Bitcoin. Many individual investors have recognized the potential of Bitcoin as a store of value and a hedge against inflation. Consequently, they are adopting a hodling mentality, choosing to hold onto their Bitcoin for the long term instead of actively trading it. This behavioral shift further reduces the supply available on exchanges, as more Bitcoin is held in personal wallets. Implications for the Bitcoin market. The decreasing available supply of Bitcoin on exchanges has several implications for the overall Bitcoin market. Firstly, it underscores the growing importance of institutional investors and their impact on market dynamics. Their significant buying power and long-term investment strategies have the potential to create supply-demand imbalances and price volatility. Secondly, the scarcity of Bitcoin on exchanges could lead to increased price premiums. As the supply diminishes, buyers might be willing to pay a higher price to acquire Bitcoin, which could drive up its value. This situation could further fuel the bullish sentiment in the market. Finally, the shift towards holding Bitcoin off exchanges reflects a broader trend of increasing trust and confidence in the security of cryptocurrency custody solutions. As more investors opt for self-custody or institutional-grade custody services, the perception of Bitcoin as a safe and reliable asset grows stronger. The shift towards decentralized exchanges. As the available supply of Bitcoin on centralized exchanges continues to shrink, there is a parallel rise in decentralized exchanges, DEXs. DEXs operate on blockchain networks and allow users to trade cryptocurrencies directly from their wallets without relying on a centralized intermediary. This shift towards DEXs can further contribute to the reduction in available supply on centralized exchanges as users opt for more secure and trustless trading options. Regulatory factors and their impact. Regulatory developments also play a significant role in the decreasing available supply of Bitcoin on exchanges. Governments and regulatory bodies worldwide are increasingly recognizing and addressing the cryptocurrency market. Some countries have implemented stricter regulations and increased reporting requirements for exchanges, leading to a decrease in available supply as exchanges adapt to comply with these new rules. Regulatory changes can impact liquidity and the ability of exchanges to hold and trade cryptocurrencies, further contributing to the shrinking available supply. Market sentiment and investor psychology. The diminishing available supply of Bitcoin on exchanges is not solely driven by external factors. Market sentiment and investor psychology also play a vital role. As the cryptocurrency market matures, investors gain a better understanding of Bitcoin's value proposition and its potential as a long-term investment. This shift in perception leads to a greater inclination towards holding Bitcoin, reducing the amount available for immediate trading on exchanges. The impact on altcoins and the crypto ecosystem. The decreasing supply of Bitcoin on exchanges also has implications for altcoins and the broader cryptocurrency ecosystem. Bitcoin's dominance in the market and its role as a gateway cryptocurrency mean that its scarcity can have a cascading effect on other cryptocurrencies. As investors seek to diversify their portfolios and capitalize on the potential price appreciation of other cryptocurrencies, the reduced availability of Bitcoin can drive up demand for altcoins. This increased demand can result in price rallies and market volatility for alternative cryptocurrencies. Potential risks and challenges. While the decreasing available supply of Bitcoin on exchanges presents potential opportunities, it also poses risks and challenges for the market. One of the primary concerns is the potential for price manipulation. With a limited supply on exchanges, large holders of Bitcoin can exert significant influence on the market by strategically selling or buying their holdings. This concentration of power raises questions about market fairness and transparency. Moreover, the scarcity of Bitcoin on exchanges may lead to higher transaction costs and slower transaction speeds. As demand surpasses supply, exchanges may face challenges in efficiently matching buy and sell orders, resulting in delays and increased fees. These issues can hinder the overall usability and adoption of Bitcoin as a medium of exchange. Conclusion. The decreasing available supply of Bitcoin on cryptocurrency exchanges is a significant trend that highlights the evolving dynamics of the market. Factors such as institutional investment, retail demand, the rise of decentralized exchanges, regulatory changes, and investor psychology all contribute to this phenomenon. While it creates the potential for a supply shock and price appreciation, it is important to consider the broader implications for the crypto ecosystem and the challenges that may arise. As the market continues to evolve, monitoring the available supply of Bitcoin and its impact on various stakeholders becomes crucial for investors, traders, and enthusiasts alike.